Today's top corporate story, shares of AT&T jumping after Elliott Management disclosed it has taken a stake in the company. Joining us now on the Squawk Newsline, Jonathan Chaplin of New Street Research. Where have you been on the stock in recent quarters, John? I mean, have you been bullish? Have you been frustrated? Did you like the acquisition of Time Warner but wanted more? What have you been saying?
We've been frustrated for a long time with AT&T stock. Like Elliott, in certain parts of the business, we've seen the potential there for years. We just despaired of it ever being captured under this management team with the strategy that they've deployed up until now. So this is a really interesting move from Elliott. If they can shake things up and get the management team focused on the opportunity, it's certainly compelling. It's a company with a better set of assets than Verizon today, with margins that are 500 or 600 basis points lower, with growth that's been significantly lower for years. That's where we see the opportunity. The challenges are going to be dealing with the issues with the DirecTV business, and potentially down the road with Time Warner. I think there are structural challenges there that will be difficult to address even with good management.
So that's the question, Jonathan. If you're sitting in the corner office of AT&T today, what are you thinking?
So if I was in the corner office of AT&T today, to be honest, I'd be looking at breaking up the company back into its three constituent parts. I honestly don't believe that there are synergies between the wireless business, the TV distribution business, and the media business. I'm assuming that's not on the table as a potential strategic remedy, at least at this point. I see the opportunity in the wireless business really being capitalizing on the huge spectrum portfolio that they've got, and they just started to deploy, ripping out a lot of inefficiency and cost, and driving better growth and margin in that piece of the business, which is still slightly more than 50% of the company overall. That's the piece where there's an immediate opportunity to capture value. With DirecTV, it's not clear what can be done to fix it. With Time Warner, I think the most immediate fix is putting somebody who really understands the media business in charge of that asset. At the moment, it's being run by John Stankey, who's a great executive, but not a media executive. And there have been reports of, or we've seen it, talent fleeing the business. It's such a competitive industry right now. This isn't the time to let talent exit the media business.
Well, Jonathan, but let's just walk this through. So you have the Time Warner, which obviously is one of the biggest assets that the company owns now. It's been run by John Stankey in terms of this transitional period, at least. They brought Rosenblatt in to help with that. Who would you want to get in there? And can the current management that's there do the job that you're talking about?
So I think just elevating Greenblatt to the CEO role,
Stankey
out of the business, would probably be a positive step. I don't know Greenblatt all that well, but he's a well thought of, credible figure in the media space who's been in the industry his entire career. And I think creating sending the message that AT&T is focused on retaining talent in the media business, and they're going to create a great place for talent to create great content and thrive, would do a lot to drive a shift in sentiment within that business, and prevent it from sliding any further.
All right.